This is Bruce Blythe with Advance Publishing outside the Chicago Board of Trade, where the big news of the week was a couple of USDA reports out Wednesday morning, the latest crop production figures, and the monthly supply and demand updates. The USDA lowered its corn harvest projection a little more than expected. They're saying we're going to have a 12.31 billion bushel harvest this fall, which is down about 1% from the agency's estimate in October. It would be the smallest crop in 3 years. The average nationwide yield they put at an 8-year low, basically underscoring the weather problems we saw in the Midwest over the spring and summer that curbed our harvest prospects. Marty Foreman, who's with Doan Advisory Services, said USDA essentially reinforced what we already knew, which is that corn stocks will remain tight into 2012, and with that, high prices will remain high. And these high prices are forcing cutbacks among major corn users, especially in the livestock sector. We've seen poultry producers curbing production in recent months. And Scott Davis, who's with Bullpen Trading in Minnesota, says beef and pork producers almost certainly will not escape unscathed from these high prices. He thinks we need to see further demand rationing, as corn trades above $6, and potentially rises back to that $7 target. By the way, the USDA cut its estimate for corn feed use over the next year to the lowest levels in 22 years. On the market, in the markets here, summer corn futures trading around $6.45 a bushel near the end of the week, down 1.6% on the week and on track for the first weekly drop in 6 weeks. Tone softening a bit. Part of that reflects sluggish demand, especially on the export side, and ongoing global economic turmoil tied to Europe's problems. In the livestock markets, also a bit of a weaker tone. Summer live cattle futures around $1.22 a pound, down a little over 2% on the week, and down from a record $1.24.5 a pound a week ago. And that market, though, has continued to see support from beef prices, box beef reaching over $1.90 a pound this week, highest prices since early April. And the USDA also cut its forecast for U.S. beef production next year to a 7-year low. Hog market December futures trading slightly under 86 cents a pound near the end of this week, down slightly more than 1% on the week. And that market hit a 6-week low of above 85 cents on Wednesday. We've seen continued weakness in pork prices, suggesting a slowing demand. The wholesale pork cutout price is trading at 90.43 cents a pound currently. That's down almost 10% over the past 3 weeks and at its lowest level since early June. And once again, I'm Bruce Blythe with Advance Publishing outside the Chicago Board of Trade.